Somebody said to me last year, they said, Sam, how the hell is this company Neo? They're losing billions of dollars every single year that they've ever been in business. How are they still in business and how the hell do they have so much money? It doesn't make any sense. Well, very good question. Neo just reported within hours that they once again lost around $1 billion in the numbers are staggering, in the fourth quarter of 2024. Their losses are growing, and yet they aren't actually at immediate risk of bankruptcy. That said, though, AI says their risk is growing substantially every single week. Here are the details behind what's actually going on at Neo and why Neo isn't bankrupt when, to be honest, it should be. It's lost so much money, it's insane. I mean, basically the US investors, the US public, they're just looking at Neo going, what the hell is going on with that company? How are they still selling cars? Here is how they're managing to pull it off, even though they're losing insane amounts of money on every single car that they sell, despite some creative reporting saying otherwise. Hello, my friends. Welcome to the channel. Great to have you with us. I'm Sam Evans. You're watching the Electric Viking. Neo, the Chinese EV manufacturer, who are listed on the US Stock Exchange, reported their financial results for the fourth quarter and full year of 2024, revealing growth in revenue, but widening losses. Revenue, 2024 Q4, so the fourth quarter, the last 3 months of 2024, revenues reached $2.7 billion US, marking a relatively low increase of 15% versus the same quarter the previous year, and an increase of 5.5% from the previous quarter, which is a bit of a shock. Generally, the fourth quarter of 2024 is the quarter where all of a sudden your revenue skyrockets for most car manufacturers in China. Net losses. The company recorded a net loss of RMB 7.1 billion, which is about $975 billion US. That's a 32.5% increase compared to the same period in the previous year, and a 40.6% increase from the third quarter of 2024. In other words, their net losses, their debts are growing substantially. They're accelerating. I mean, there's a reason Neo just fired 10% of its staff because it's losing so much money. I mean, $1 billion for 1 year, okay. You lost $1 billion US in a year. I guess you could deal with that maybe. $1 billion in 3 months? Yeah, surely, right? Surely Neo's going to be in financial trouble, you'd think. Vehicle deliveries. Neo delivered 72,000 vehicles in Q4, a 45% increase year over year. So its vehicle delivery numbers have gone up pretty significantly, but its revenues have only grown by a relatively small amount. Vehicle sales. Annual vehicle sales totaled $8 billion, which is an 18% increase from 2023. So in other words, its deliveries increased by 45%. However, its total sales numbers only increased by 18%, showing you that actually the net value of every car it sells has come down significantly over the past 12 months. Gross profit. The gross profit for the year was $888 million, but obviously, as I mentioned before, the company has actually made big losses this year, so that gross profit number is pretty misleading. Liquidity concerns for Neo. Neo acknowledged that its current liabilities exceed its current assets. Now, that's kind of concerning. They admitted that on the 31st of December 2024. And is the situation now even worse? I'm assuming so, because considering they hadn't done their numbers on the 31st of December, I'm going to guess that their debts now are $1 billion worse. And considering their assets were already worth less than their debt burden, it's to me, it doesn't look good. The company, though, has said it has sufficient funds to support operations over the next 12 months, and it said that right before it fired 10% of its staff worldwide. Bankruptcy risk. ChatGPT 4.0 Enterprise, it costs quite a bit of money to actually pay for this software, and it's quite advanced. It's actually pretty amazing. It says Neo has an above average probability of experiencing major financial distress within the next 2 years, with odds of distress estimated to be over 60%. That's pretty concerning, especially when you consider the fact that for this research I've done here, ChatGPT Enterprise examined about 200 different financial documents to give you that result. Conclusion. What does this all mean? Well, NIO continues to grow its revenue and vehicle deliveries, which does appear good, but its increasing net losses and liquidity concerns present major challenges, thus the reason they've fired 10% of their staff. The company's acknowledgement of its liabilities exceeding its assets and the heightened probability of financial distress underscore the need for major strategic restructure to improve profitability and financial stability. And you know what? NIO's stock has reflected this major concern. In 2020, 5 years ago, NIO's stock was worth 10 times what it's worth today. Literally 10 times. Today it's worth around $4. Back then it was worth $45. NIO stock actually peaked the following year in early January or February of 2021, so 4 years ago, at around about 65 US dollars. Now, as you can see, it's sitting around $4.70. Investors are not confident in NIO's ability to actually deliver. And considering that in that 5 year period of time, NIO's sales have rapidly increased. I mean, the numbers are still not what they would have hoped for, but they're much better than what they were back in 2020. And yet, why then has the stock essentially collapsed? Well, NIO has a lot of cash on hand. How is that? 1, equity financing. NIO has effectively tapped into global capital markets to raise funds from people who have, at this point, probably lost a lot of money. I mean, to be honest, that share price hit a high of $65 and it's now sitting at $4.70. Then it's not only me that lost money on NIO stock, there's probably a lot of other people who have as well. As a publicly traded company listed on the New York Stock Exchange, Hong Kong Stock Exchange, and Singapore Exchange, NIO issues shares to gullible investors like the Electric Viking who are betting on its future growth. I've got to admit I did sell a long time ago, but still I lost. This equity financing has been a major source of cash, allowing the company to fund its operations and expansion despite constant ongoing massive losses. In 2020, for example, NIO secured a significant investment from the Hefei government in China, which provided a crucial cash infusion during a massively challenging period. But, I mean, this wasn't a deal where the government said, we're just going to give you some money. The return was, well, we own part of your company. So, point 2, NIO does get revenue from vehicle sales. Although NIO is not profitable, it does generate substantial revenue from selling its electric cars. In Q4 2024, NIO's revenue reached $2.7 billion, a 15% increase. That said, though, this revenue is insufficient to cover all expenses and achieve profitability. So really, that is draining a lot of these investments, outside investments that have come from the Chinese government and also private investors. However, NIO has attracted a lot of cash through strategic partnerships and investments. Beyond the Hefei government deal, the company has leveraged collaborations to secure funding. These investments not only provide immediate liquidity, but also support long-term growth initiatives such as research and development for new models. That said, NIO is not really considered to be one of the companies in China that is leading the way when it comes to any form of EV technology. They don't have the best self-driving. They don't have the best battery technology. They don't really have any great battery technology at all, to be honest. They don't have the best charging, the best efficiency. To be honest, not a lot to show for all the money that's been spent. But over the last 5 years, NIO has provided many stock offerings, sold lots of shares to the public, convertible bonds, debt that they can convert into stock, and private investments from mostly Chinese government and tech giants like Tencent. In 2020, the company actually nearly went bankrupt, but they were bailed out by the government with $1.4 billion. In addition to that, in 2021 and 2023, NIO actually did secondary stock offerings, which raised billions of dollars from basically Chinese investors, mum and dads like you and me. Add on to that, NIO is getting massive government support. Now, there's a lot of criticism of the car industry in China saying they receive huge subsidies. And the truth is BYD does get some subsidies, but it's not that much. NIO has gotten a lot more from what I can tell. NIO has received very deep support from local Chinese governments, especially in Anhui province, nearby to where the Volkswagen Group have several of their factories as well. These subsidies include, well, subsidies themselves, tax breaks, cheap land, strategic funding to help NIO remain a national EV brand. While NIO's net losses have been huge, $1 billion in a single quarter, the reality is that both institutional and retail investors have funded this company. They believe NIO will eventually scale into profitability like Tesla did, although that is certainly not guaranteed to happen before the money runs out, and that China will protect and promote its homegrown EV leaders. In other words, China won't allow NIO to go bankrupt. I don't believe that's true, though. The reason I say that is because several Chinese EV companies, including really well-known brands in China, have gone bankrupt over the last few years. China is letting things play out. At this point in time, with widening losses and increasing competition from BYD, Tesla, Xpeng, Huawei, Zeekr, Geely, Chang'an, NIO is under huge pressure to pull itself out of the hole that it is clearly in. Could they go bankrupt? Not imminently, thanks to current cash on hand and continued vehicle sales growth. But the risk is rising immensely. And that is if losses continue at the current pace, the money will run out within the next 2 years. They won't have any money left. And they'll have to raise more money. I think investors have probably been burned enough times now to think, I don't know if I want to be involved anymore. If global capital becomes harder to access, which it almost certainly will, I'm fairly convinced that NIO's debt will be downgraded, as has the Volkswagen groups within the last week, as has Nissan's, as you know. If Chinese state support weakens as well, that will hurt them. And also if consumer demand shifts to cheaper, faster growing rivals, which I think it is. Even though NIO sales have been going up, their market share has not been going up. Think about it, right? Around 55% of all cars sold in China this year have been plug-in hybrids or EVs, with most of them actually being electric. But NIO's sales have represented a tiny fraction of those actual sales numbers. And companies like Xiaomi have rocketed past them within only 12 months. NIO's new brand, Onvo, was a huge investment and appears to have been pretty much a flat-out failure so far. At this point, NIO is keeping its head above water, surviving only on investor capital and government backing, not profits. It's a high-stakes EV bet, and one that's facing more and more scrutiny as losses grow as the market matures. Guys, I'm curious to know, how do you feel about NIO's position? This is really an explanation of how the hell they're still in business, even though they keep showing us these crazy debts, but why the company is certainly in a lot of trouble over the next couple of years, and the pressure is building at this point.